Might have to get creative to buy your business. We found a cybersecurity company for sale that we thought looked just perfect for one of our Owner Actions clients. They were advertising $950,000 in annual cash flow. They're asking $2.5 million for the business and $1.9 million for the real estate. Now the math worked out really well with those numbers, but there were a few big problems. First, the cash flow is pretty volatile. They made $350,000 in 2022. They made $918,000 in 2021. Then they made $300,000 in 2022, and they're on track for almost $1 million in 2023. So as we're digging into this business, when we really need to learn why the cash flow is going up and down like that, see what causes the volatility. Is it just kind of one-off contracts, or really what's driving it? But let's just assume that we get comfortable with that and we decide that we want to keep looking at it. So the first thing you want to do when you have that type of volatility is, instead of just basing it off this current year's cash flow, is that you want to use an average of the last 3 years. So in this instance, if we take the average cash flow and multiply it by 3, which we think is a reasonable multiple for this business, we think the business should be worth around $2.2 million, which really isn't that far off of the $2.5 that they're asking. But even after we make that adjustment, the banks typically look at the cash flow generated in the prior business year as shown on the tax returns. So in this instance, the tax returns are only going to show $303,000 in cash flow. And that's what the bank is going to use to determine whether to make a loan or not. So basically, this deal's unfinanceable. Now, the good news is when you run into a business that can't get financing for some reason or another, is that that's true for everyone, not just for you. So it's something that the seller probably knows they're going to have to make some type of deal that's going to involve either heavy seller financing, or they're just going to have to sell it for a lot less to a cash-only buyer. So we try to think about this and what was maybe a creative structure that could possibly get to the finish line. So first, we'd finance the purchase of the $1.9 million of real estate over a 25-year term. The SBA will allow you to buy owner-occupied real estate with no money down. So we can do that $1.9 million loan with possibly no equity injection or no down payment. And so that's going to put $1.9 million into the seller's hands in day one. So they are getting some cash flow from the beginning. It's not a 100% seller finance deal, because 100% seller finance deals really only exist in social media. For the business though, we are going to try to do a near 100% seller finance. So we'll probably put in, say, a 10% down payment, and then we're going to finance 90% of it from there. But that's just for the business. So the seller is getting almost half of their cash up front. So it's really closer to a 50-50 deal between cash up front and seller financing. And I think this is something that we could get all parties to agree to. I think we get the bank on board with those terms. I think the seller, they might be reluctant, but it might be the best offer that they're going to get. And obviously for the buyer, it's going to work out great. They're going to get a business that they really like, that's just right for them. Again, that's if we can get comfortable with that volatility. So what do you think of this structure? And there's infinite ways that you can structure any deal. Let me know if you've got a way that you think you could creatively buy a business like this.